This week in economics on the 10th of June 2017 from WBRN Radio in Boston and on the Bostonred Network. We roll along. Very interesting week. A lot of political machinations in the UK. The failure of the Prime Minister there, Theresa May, to improve the Tory party's majority in the Parliament is the story of the week, no doubt about it. Sterling fell 2% at one time. Those are the immediate results. The Brexit negotiations will start in full on the 19th of June. The new government has not been formed as of yet. They have what's technically called a hung parliament in the UK. The Tory government did not receive a majority, thus they have to form a minority government with the Irish National Party in Belfast. This is a different scenario. The parties are different in their outlook on some political questions. Now, how this will affect things, we don't know. She will, Mrs. May will report to the Queen, and they will form the government. Now, we'll go to the BBC to get some details of this, but basically no confidence votes and those kinds of things will be taken care of under the agreement. And, of course, more financial assistance for Ulster. Some of the highlights of this agreement that is still in the work. But the political fallout was vast. It was deep. Many political pundits, polls, etc., at one time had felt the Tory government would improve their majority. They did have a majority in the Parliament before what was called a snap election was called by Mrs. May. But it did not work out. The Labour Party did much better under Mr. Cameron with a Labour-type manifesto, not a Tony Blair-type manifesto, but a true Labour manifesto. They were able to go out and talk to working people in the UK. Particularly, they increased their votes in the north of England. And there were other areas there, if I can find my notes from the political program Bostonred, at least some of those notes as to some of the constituencies they were able to win that have not been winnable for a number of years onward there, and I'm not certain if I find my notes, but Canterbury, Canterbury was one, Ipswich and Stroud. Canterbury flipped to the Labour Party. And the City of London also. Now, the City of London, let's separate that out from London itself. That's the financial area there. Labour did very well in that area of London. So what does this have in store? Well, a bit of instability for the UK. Pound sterling falling. And at the same time, will there be what they term May would have had a hard Brexit as opposed to quote-unquote a soft Brexit. The German Chancellor has made it clear that what they expect out of the UK government, and they will hold more cards in their hand than traditionally thought there. What we'll do, we'll start out with some of the market PMIs from the market global IHS global sector PMIs. Now, this is some preliminary findings. This is in a May growth of high-tech output at a 32-month high. Industrial expansion at a 26-month record. And financials held back by real estate. Now, the latest Global sector PMI signals that technology and industry continue to drive global economic growth on a sectoral basis in May, supported by strong expansions in telecoms and in financials. Growth of high-tech activity accelerated to a 32-month high in May. The technology sector has topped the broad global sector ranking 3 times in the past 4 months. 2 consecutive sectors of technology equipment, which we call hardware, software, and service, were ranked 3rd and 5th place. There, industrials remain the 2nd fastest growing broad sector for the 3rd month in May. The preliminary reflected strong growth in commercial and professional services, supported by solid increases in output in transportation, machinery, equipment, and general industry. Financial registered a strong growth in May, with other insurance, that'd be good news to Mr. Buffett, and other financials seeing the sharpest increase in activity. Real estate weighted an overall growth of the sector. Now, it's very interesting there, technology, industry, telecommunications, financial, consumer goods was much lower here, and then we get to basic materials. Healthcare, this is on a global situation, was less than in May. This is May, April. I'm looking at a chart here. Consumer services in May backed up. And we're looking at actual rates here at roughly 52, it looks like. Let me just do a little increasing here. Was at shy of actually 52 if we these percentages, but technology basically at 56 was a rating for technology. Now this is in May of 2017. Industrials a little bit over 54, and telecommunication about the same in May. Financials at 54. Consumer goods a little bit over 52, and basic materials about the same, a little less. Healthcare basically about the same as basic materials, and consumer services shy of 52. So those are some of the things that has happened on the global scene there. And let's move on here to the European sector PMI. Incidentally, this is dated on June the 7th. Technology led the European growth in a May. Strong expansion recorded in 4 other broad sectors led by financials. The European sector PMI data indicates strong growth in many categories in May, most notably business activity and technology, increase in faster rates, the fastest rate since August of 2000. Sharp growth was also registered in financials, industries, basic materials, consumer goods, while healthcare and consumer services lagged the overall trend. Now this is in the European as opposed to the global sector here. We're starting to see some trends here. The manufacturing component of technology equipment registered the fastest growth, all detailed service monitoring. The other component, software and services, was 5th in the growth ranking. General industry, machinery, equipment, banks, construction materials completed the top of the 6th league table. Consumer services output rose only fractionally. Now this would be very important if we were looking in the U.S., but also in the EU countries. Tourism and recreation, which was only detail sector to reach a contraction. Media output rose at the strongest rate in 11 months. So some of the things that are going on here: technology, financials, basic materials, technology at, let's see, where are we? At 56. I have to increase this a little bit here. Oops. Actually at 60. Whereas consumer services just a little over 50, little month, almost 50, was almost 52 in April. So we're looking at healthcare here, sort of a little bit over between 52 and 54, and consumer goods at about 55 here. One of the things we start to look at immediately. Now let's go to the U.S. service PMI, second fastest increase in basic material output over 2 years. Financials picked up in to 2017 high. Basic materials sector remains the fastest growing in 6 categories in May. That's the U.S. sector PMI. Basic materials one of 5 to post a strong increase in May, including technology, consumer goods, consumer services, and financial. Financials, the latter registered the fastest rise of activity in 2017 so far. The basic industrial sector weighted on the overall U.S. growth, registering the slowest rate. Now, in May, since last September, also weakened healthcare during the last period. So healthcare on all of the PMIs have weakened here. Healthcare down. Now this is the sector PMI. Industrials down in the U.S. The consumer sector, they're at about 52 here, and of course basic material was up. They were over 56, and technology was up at the time. Now let's backtrack a bit here, and we'll look at technologies. This is from Bloomberg. Jeff Bezos slipped in his climb to become the richest person. This is from Bloomberg. In the world when Amazon fell 3%. This is on Friday. It slipped 2.6 billion from his network. It sapped. The online retailer was caught in a downward draft of investor jitters on the tech sector, pushing the founder number 3. This is on the Bloomberg Billionaire Index with 83.9 billion. Facebook's Zuckerberg and the co-founder of Alphabet, Pagel Brain, and Sergey Brin and Page. They were 4.6 in a decline. Bill Gates remains the top ranking anyway there. But this is what starts to happen many times when people get into the quote-unquote jitters. And let's see. We're just throwing while we're here. This is in Bloomberg. The cost of lunch with Warren Buffett at 2.68 billion, and this is for the GLID homeless operation that his late wife ran in San Francisco. A number of people will dine with Warren Buffett at a steakhouse of all things. I guess they're not going vegetarian there. Some of the things that are going on here. Somewhere we have the Republicans' machinations that occurred here. The House passed a new financial bill to replace Dodd-Frank, what they call a choice operation. Be very careful when you hear the word choice. Not sure where we found that. I looked at it earlier, but so we'll just recap it. Anyway, nonetheless, this choice thing is headed for the Senate, where it will get a different view. Now, this is an opinion piece here, but we'll just look at it. The Trump economic agenda is almost dead. Maybe this is where we found it. Is in a very dangerous territory. This is according to Barry Ransholz. I think I pronounced his name correctly. Anyway, let's begin with observation. Long-awaited pivot towards being president hasn't arrived. Anyway, the good news is that the global economy keeps expanding as corporate profits rise, and the post-credit crisis recovery continues. And left to its own devices, even the Fed, of course, starts to normalize things. The bad news is self-inflicted wounds. The repatriation, that's the financial thing, bringing money back in. Structural investments could put the U.S. even on a very the trifecta, what he calls financial reforms. The next decade, several was a legacy of Reagan now, who oversaw a similar once-in-a-generation economic boom but resignated for the next 30 years. Some would argue that actually Bill Clinton presided over that. So this is some odds he gives. On November the 9th, I placed the odds of passing a robust economic legislative agenda at 96% the day DJ Trump took office. The cracks, in my opinion, appeared. By March 1st. I lowered the odds to a healthy 75%. Now I think 25% even might be optimistic. Let the weight of missed opportunities sink in a minute. What's astonishing is that every misstep has been an unforced error, so almost like in baseball. If Trump only was merely repeating President Obama's what he called rookie mistakes here, but the Twitter thing comes in, won't get into that. The president is becoming radioactive, no doubt about that. Resignations are mounting. Diplomats are revolting. Hundreds of key personnel have gone on filled positions, that is. He admits to having no crystal ball, but the worst-case scenario for sentiment prospects is a year of investigations, and the malaise spreading amongst consumers and investors. The odds are basically 50-50, he says, of that. Well, the investors are not as they say, in a what Dr. Greenspan called effective hubris, or irrational expectations. Anyway, President Pence, who I suspect never really wanted to be president, Trump, who never wanted to be president, the odds he gives 30% following, even he does a full corporate tax reform, even a tax cut. Let's see, Fox News Today, they begin. Pence takes over and reaches, I see, across the aisle. This is for repatriation and some of those things under Pence. And from a general observation, which is basically about true, presidents get roughly a little over a year to get things, quote-unquote, done, and then people start looking at the midterm elections. Perhaps the investigation amount to nothing. A wounded president finishes out his first and only term. The odds there at 20%. And then he covers, and many people have talked about his vindication situation. If nothing happens in these investigations, period. GOP leaders embrace the newly invigorated president. The full legislative agenda passes, and a century of peace and prosperity begins. The odds. How many decimal points am I allowed to use? Well, it's interesting. A footnote here, he finds himself in agreement with Karl Rove, principal advisor to G.W. Bush. Credit goes to Paul Volcker, who contributed to the 80s and 90s economy. Cannot be underestimated, no doubt about that. Tall Paul. Yeah, we'll see, 6'7", 6'8", very tall man. Anyway, nonetheless, this is where the DJ Trump operation ends, and it is an important situation when we look at Brexit also. Let's go over to, this is where actually Dodd-Frank. This is from the BBC. We're now there. House Republicans approved a sweeping measure on Thursday that would ease rules on banks. A bad idea. Weaken consumer protection, scrap federal bailout for major financial institutions. But Democrats vowed to fight the bill with few exceptions expected to advance. Therefore, it goes to the Senate. Supporters say the bill dubbed, and this is what you're very careful of, Financial Choice Act. There is no choice there. Among the major changes, the bill would allow banks that maintain a certain level of financial surplus to opt out of those rules and abolish the bailout process established for major institutions. It also rolls back a wide range of other rules touching on issues from payday lenders to stockholder proposals. A very, very bad bill. What's called financial choice stands for economic growth for all. It will not. And bank bailouts for none. That's a charade itself. In the Senate, Sherrod Brown, the Democrat who heads the banking committee in the Senate, has said he is open to loosening the rules for smaller community banks. Well, smaller community banks are in themselves a different issue totally, and there's been talk of that. And let's just jump back here to Reuters on the regional banks may keep lagging without a Washington uplift. This particular article, roughly a few months for most U.S. bank stocks have been particularly unkind to regional banks. While investors see bargains in lower valuations of regional bank shares, few can point with any confidence to near-term catalysts for turnarounds in their fortunes. After outperforming the larger banks in wake of the 2016 election, the S&P 600 index of small-cap banks is down 8.1% so far this year. Data through Thursday shows the S&P 500 index of the biggest banks, the SPX-BK, is unchanged. The full S&P 500.SPX is up 8.7, so effectively reversed the sentiment there. Larger banks up, smaller banks down. Those hope to dwindles dynamically as it becomes clear that Trump would have only difficulty gaining enough support to deliver on any pro-growth proposal. Last year, investors bet heavily that the smaller entities, banks, would have benefited most from DJ Trump's promise tax cuts, deregulation here, but I would expect smaller banks to continue to be underperforming as long as we don't get some of these policies to move forward. That's from Stephen Scouter, the bank analyst at Sandler O'Neill, in Atlanta, Georgia. Falling hopes for economic boost from Trump's agenda have compressed the gap between short and long-term interest rates, putting pressure on bank loan margins. This is the biggest issue for regional banks, which have greater dependency on trends for their profits than bigger and more diverse banks. Commercial and industrial loan growth has slowed this year after climbing steadily since late 2000. The Federal Reserve's Senior Loan Office option survey released on the 8th of May showed domestic banks reporting weaker commercial and industrial loan demand from firms of all sizes in Q1. And also people are waiting for clarity. Now this is the same situation in the UK. The smaller banks to outperform, concern over the overall economy needs to dissipate. Better economic growth usually leads to better lending growth, and in that environment the yield curve steepens. That's from Brian Kling Hansen. Anyway, he's with Kiefer and Wood in New York. Short selling has decreased in most regional and diversified banking sectors so far this year, but short interest in both the S&P Bank Exchange Traded Fund and the Regional Banking Fund increased as short sellers may be replacing exposure to individual banks with short bets on the sector. There's some of the technical information. I won't go into all of it here. The Treasury Secretary has unveiled plans for regulating U.S. bank sector, including relaxation of regulations for community banks, which have struggled with rules imposed by Dodd-Frank. But that is more of a pipe dream right now. Everything is clouded. If the administration replaces the Federal Reserve head of banking supervision, this might at least help slow the process of regulation. That is, investors expect the administration to have trouble winning congressional support for legislative changes such as Dodd-Frank. Here, evidently, Trump has put Professor Marvin Goodfriend up to be in the regulatory situation. But again, that is something that is in the works, but not out there. So in other words, that is another situation that is up in the air, and it is definitely up in the air there. So we'll see where that goes. That is with Bloomberg. Let's rally back to the BBC and to business. We got Dodd-Frank out of the way. Brexit, we basically got out of the way. Under the headline, economic results rattle faith in the economy. This is on nerd bonds. Certainly, businesses always are. The prospects, speculation there. The FTSE closed, the FTSE 100 closed up 1%. We'll get to that in a minute. Let me see, what day is this? Okay, June the 9th. So it was yesterday. Disposable income will be stretched. That's from one analyst, Nicholas Height. By afternoon, trading in sterling was down a 1.7 against the dollar at $1.27. Basically, there against the euro, the pound was down 1.5% at 1.13. Basically, almost 1.14. A weaker pound might improve a good price higher and squeeze a consumer's ability to spend. The impact is clear. Consumers' disposable income expected to be stretched. Big ticket items like property upgrades, as well as little luxuries. Home builders, including, and this is a local home builder, Persimmon, saw falls of up to 5%, but recovered slightly to finish at 2 to 3% down. Retailers also felt the flutter, but paired losses in late trading The next closed at what, 1.75. Banks more dependent on the UK were also hit. The Royal Bank of Scotland closed down 2.4%. Overall shares were higher on the benchmark FTSE 100, up 1% there. Traders expecting a clear victory for the Tories. Is still the largest party. Well, that's not much to put out there. But investors' sentiment was not helped by the latest. This is UK production figures, which showed output rose less than expected. The pound move is significant, and it's less striking than seen in the afternoon of the Brexit vote that was late June, when it plunged 10%, didn't plunge 10%, but it's not over yet. Some analysts say it might reflect the diminishing prospects of a hard Brexit, and it's overall domestically, some commentators suggesting that the Tory government's long-standing austerity program, which has seen public spending constraint in a bid to cut UK debt, may be over. These austerity programs always have very, very limited effect. There will be a less austerity and fiscal tightening in the future under a weakened Tory party. There will be no significant rise in the gift and insurance government IOUs, and the goal of reducing the UK's debt ratio of GDP over the next few years is likely to remain in place. So these are some of the things that are happening here, and let's get to production figures and take a look at those, and then we'll move towards doing the numbers. Weaker than expected. This was also on the knife here. Output rose by 0.2% in the month, much lower than the 0.8% increase forecast by economists. Manufacturing output, a key component, grew by 0.2%, which is much weaker than expected. Separate figures from the National Office of Statistics shows that the UK trade deficit narrowed in April. The goods trade deficit with the rest of the world narrowed to 10.4 billion pounds from 12 billion pounds. Overall trade deficit covering goods and services narrowed to 2.1 billion pounds in April from 3.9 billion a month before. 3 months to April, industrial output was down 1.2, driven by falls in energy and manufacturing. That backs up the picture of the UK economy losing momentum in the first few months of the year. Last month's estimate by that it grew at the UK economy at 0.2. That makes the UK economy the worst performance amongst the G7 nations in Q1 of this year, outpacing them in 2016. The Office of National Statistics, the first quarter slowdown was partly due to consumer-focused industries suffering as people cut back on their spending. Again, this discretionary income situation, we see more and more of that. Let me finish this up and we'll go and do the numbers. But now we're starting to understand some of the trends involved here, in spite of what the Tory Prime Minister, Mrs. May, says, period. In passing here, SoftBank, that's a Japanese tech conglomerate, has bought the robotics business of Google. And we'll see where that goes. We've been spending some time here at the Numbers Man concession looking at robotics and the effect of robotics on work. We'll continue that. German business leaders, hardly known anyway there. Many boardrooms from Berlin to Brandon Wolfenberg will be doing this morning, discreetly after the Labour Party's Jerry Corbyn outperformed expectations. There, the reason for this embrace simply is a single market. Initially, there had been little to no interest in the UK election in the German business circles. Most likely, the polls assumed a comprehensive win for the Tories, and the size of her majority victory was seen as being a negotiable consequence to the direction of the Brexit negotiations. As the chief executives of multinationals put it, a weak or strong UK government still has no negotiating power in Brexit. The EU still sets the agenda and the terms. Many firms, especially those in the Mostel, Germany, and small and medium-sized business, have often had closed ranks in the UK and have been working on the assumption of so-called hard Brexit for months. Quite a few mentioned they are counting growing in other European exports, in Poland, for example. But the polls began to narrow. There was a last-minute scurry to understand what Jeremy Corbyn-led approach to Brexit would be, with a few privately concluding that the chances of keeping Britain in the market would be higher under the Labour government. What seemed like a last-ditch effort by the head of BDA, that's the German Employers Association, to find a solution that would enable the UK government to negotiate some form of single market across after Brexit suddenly didn't seem as far-fetched. Now, this is kind of interesting where the thinking starts here. The lack of a clear majority has led to increased uncertainty in the German economy, it said, and the road to Brexit negotiation is now obsolete. Handful of small business owners who trade links with UK or less vital suggested a swirl in the Brexit resolution remaining paramount, as it has itself has been priced in. But regardless of the reaction, one thing seems certain: the Germans' interest in the intricacies of the UK parliamentary system have never been higher. No doubt about that. So that's where the Germans stand. Let's go to the markets. Didn't know the markets would save us, but oops, hit the wrong one here. You can hit the wrong button and you end up somewhere where you didn't want to go. But nonetheless, we'll go there. The BBC Global 30 on Friday at 123.63. The FTSE All-Share at 34.98. In Amsterdam, they were 3.75. In Frankfurt, the DAC at 102.14. In Paris, they were at 35.47. In Brussels, 28.19. In Madrid, 25.20. In Zurich, 34.23. In Moscow, 5.44. And in Johannesburg, they were in the negative at 294.85. In Bombay, 48.70. And on Thursday in Karachi, in the negative 2.2, 204.48 in Lahore, also in the negative that was on Thursday. On Friday, negative 45.11. In Colombo, 4.96. In Tehran on Wednesday, they were in the red, 5.30. On Friday, in Sydney, 0.70. The Nikkei at 104. In Hong Kong, the Hang Seng was down 32.77 in the negative. In Shanghai, 8.07. In New York, 90, starting all over again, 89.44. The Nasdaq was down 113.85. And the Merc was also down negative 2.01. In San Pablo, we will continue on Monday, 1,046.17 in the negative. And in Mexico, also in the negative. The German chancellor was meeting there with the Mexican president, Neta Pena. Anyway, 66.48.42. And on to the commodities. Struggling along here. All right. Brent crude was up 31 cents at $48.17. The spot was down $1.77 at $50.29. West Texas Intermediate was up 19 cents at $45.83. T-Boone Pickens still jumping for joy. He remembers $15 a barrel oil. Nonetheless, on the Forex, gold was down $6.55 at $1,266.55. Dubai gold futures was down $7.60 at $1,280.20. Silver was down 25 cents at $17.35. And as we fly on to your next life of futures, what do we have there? Cocoa was up 73 cents. Robusta coffee was up $16. And the Bloomberg Commodities Index up 25 cents, or 0.25, however you want to do it, at 82.42. So that was it on Friday. So this will end our report here. For those in business, make next week a productive one. And as the political crisis, I suppose, on both sides of the pond continues, the Tories will form a new government. How it works, who knows? But political uncertainty there, and the machinations in Washington around the DJ Trump operation. We had the hearing there, the former FBI director, and at the same time, DJ Trump was trying to get his infrastructure program started. He traveled to Cincinnati. The talk of privatizing the air traffic control system, a bad idea, because the American air traffic control system needs modernization, and if you go to a private setup, you simply would not get the modernization. And also the same thing with tow roads, etc., to finance the infrastructure program there. Those things are not, as they say, as promising as one would. And healthcare, the Republicans, at least the Senate, to get it done by June or July, perhaps August, who knows. And for the rest of the year, try to get tax reform done. But as the polling numbers fall there for DJ Trump, these things are harder and harder to obtain. Could the Republicans pass some sort of health care program? Perhaps so, but one thing to remember about any of these programs passed under a very unpopular administration, they're very tenuous. And with an election coming up next year, which is not as far off as you would think it is, things could change if seats in the House and the Senate change, and we're looking at some preliminary elections here, but at the same time, it's a lot of uncertainty going on there. Job creation was less in May than anticipated. We'll look at June, but so when you start talking about June, we're getting into the summer months. That could reflect some job growth in what we used to call summer hiring. But at the same time, in July and August, particularly in August, those are holiday slots in the U.S. People go on holiday, and as more people go on holiday, and it used to be a time when plants took a holiday also, particularly the automobile industry. They would retool. Not as much of that going on anymore, but at the same time, we see redundancies going on at Yahoo. Verizon will be taking over, and as they take over, some job loss there, but those are job loss in the tech sector. You're not talking about tens of thousands of people. You're talking about thousands of people. But no doubt, software development is there, and we'll see where all of this goes. Google is moving towards a new operating system over there. We also have the open source report going on, and not certain what's going on here, but we'll have to see on this. I think we lost power on the workstation. Anyway, this will do it for us. We'll talk to you next week.